안녕하세요. 다들 좋은 하루 보내고 계신가요? 오늘은 투자와 트레이드를 무려 35년 이상 하시고 닷컴 버블을 비롯해서 2008년, 2009년 Great Financial Crisis도 경험하신 전문가 토드 홀트로부터 2024년 마켓의 전망과 인싸이트들을 들어볼 예정인데요. 여러분들께서 투자하시는데 분명히 큰 도움이 되실 거라는 생각을 합니다. 자, 역시나 인터뷰가 생각보다 길어져서 두 편으로 나눠서 번역하고 편집을 했는데요. 2편까지 반드시 챙겨 들으셔서 올해 여러분들께서 투자하시는데 도움이 되었으면 좋겠습니다. 자, 그러면 디스클레이머만 듣고 영상 바로 보도록 하겠고요. 지금 시킹 알파에서 20% 할인하는 프로모션을 하고 있으니 이 플랫폼에 관심 있으신 분들께서는 아래 디스크립션의 링크를 사용하셔서 반드시 20% 할인을 받으시기 바라겠습니다. 자, 저도 시킹 알파를 매일매일 사용하고 있는데요. 이 플랫폼을 사용해서 주가가 크게 오를 가능성이 높은 주식들을 찾는 방법을 영상으로 만들었으니 시킹 알파 플랫폼에 관심 있으신 분들께서는 제가 업로드한 영상을 참고해 보시기 바라겠습니다. 자, 그리고 최근에 전문 투자자분들과 미팅을 통해서 그분들께서 인공지능에 반드시 필요한 데이터 센터에 투자를 원할 경우에 눈여겨볼 만한 주식 3개를 공유해 줬는데요. 이 3개의 주식에 관심 있으신 분들께서는 아래 디스크립션에 인공지능 데이터 센터 주식들이라는 링크를 클릭하셔서 그 리스트를 받아가시기 바라겠습니다. 제가 만든 컨텐츠들은 어디까지나 정보 전달을 위한 영상들이기 때문에 절대 영상만 보시고 주식들을 매도하지 마시기 바라고요. 본인 스스로 반드시 리서치를 더 하신 다음에 판단을 내리시기 바라겠습니다.
Hello everyone, I hope you're all having a great week. Today I have the honor to speak with Todd Baba Hortz, a chief market strategist at babatrading.com, once again on our channel. And I'm really excited to hear what he has to say about the market that we are in today, and also his outlook of the market for the rest of 2024. Todd, thank you very much for your time today, and it's really a great honor to have you on the channel once again.
It's great to be back with you. You guys got a great show, and I love to be on, and I'm always welcome to be with you.
All right, thank you. So I think a lot of people have been anticipating a market crash since early 2023, but unlike what most investors were expecting, the market has been showing new all-time highs for all three indexes and have kept going up. Some are even saying that we have started a new bull rally that will last for more than a decade. But do you personally agree that the dust has settled and that we are actually maybe in the first or second inning of a major bull rally that may last for, again, another decade or so?
No, I think we're in the midst of a potential collapse. As you know, I've said before, and I'm not going to hide from what I've said in the past. For about the past year, I said I think we have a 50 to 70% haircut coming, and I think it is coming. Now, one of the problems with this year is that it's an election year. An election year, 65% of the time are higher. The last election year we were lower was 2008, and we all know what happened then. I think when you look at the general economy, we're in a lot of trouble. And of course, this whole rally was built on not only the big tech stocks, but it was built on an interest rate cut, which was supposed to come, they're going to talking about 5 to 6 cuts this year. And I maintain that there will be no cuts this year, that if anything, they're going to have to hike rates because they can't get inflation under control. Now, if they do cut rates, it will mean that we are going into a recession, because the truth of the matter is the average American is already in a recession. The average American isn't working, okay? The average American can't make paycheck to paycheck. Credit card debt, forget about the dollar amount, but the number of people that are limit debit on their credit card and paying the minimum payment has never been this high. So we continue to talk and hear how good things are, but I think these are warning signs, very similar to 2008. There was a lot of warning signs in 2007 that said that the markets were ready to collapse. There was a lot of warning signs in 2001 and in 87. And I think we're seeing the same types of warnings now. And again, I'm not telling you the markets are going down tomorrow. And in fact, just full disclosure, my positions are net long right now, even though I believe that there's a massive meltdown coming at some point.
I was also thinking that since we have the election and I looked into the past history, that unless it was in a recession, all the years that we had the election, the market did go up by the end of the year. So I guess you're saying that we might have another pullback in this year, but at the end of 2024, you think the market will be higher than what we see right now, although it's in a new all-time high.
Yeah, I think, again, if you look at the big picture, the Dow has not reached another new all-time high. It has made an all-time new high, but has not reached another one. And the index that nobody talks about, which is the Russell, small caps, the government is taking away the ability to be a small business, the cost, the regulations, and things like that. So we have a problem. The Russell's nowhere near an all-time high. So we continue to see, because of basically 4 or 5 stocks, I think NVIDIA represents about 20% of the rally. Now, again, I'm not saying that it shouldn't be there, But certainly, if you're old enough to have been through the 90s, when the internet bubble first came, the stocks went up like they do now. And eventually, they're going to stop. Eventually, the buyers are going to stop. And of course, everybody get caught long, like what happens when everybody gets caught short. So at the end, I think we're very near an end. Again, I'm not going to say it's going to be this year because, again, we can go flat for a while as well. I think this rally, we're coming to an end of a quarter, which is typically window dressing. And of course, if you understand the advisor business, they get paid on performance and having your money in the market. So you can bet on it that there's probably going to be a big amount of window dressing going into the end of this week. And that being the case, it could push the three indexes to all-time highs once again. But I think you're going to start to see the market settle and start to flatten out. Listen, we've got 600 banks that admit to having problems, regional banks. I would say that the big banks are in trouble too, but we get these ridiculous stress tests from the Federal Reserve, which I think are inaccurate. I think the banks are well over leveraged once again. I think we're going to almost see an identical view to what happened in 08. It's going to be the banks that are going to collapse, and we're going to have to fund out the banks. You're going to see the markets, and you'll see everybody run for the hills once again. But again, when is that going to happen? I got no idea.
I think a lot of people right now is believing what the Fed is saying. Inflation is taken care of. It's going to come down 2%. There's going to be a rate cut. But you're saying that you think the inflation might even go higher, meaning that there might be not a rate cut, but even a rate hike up.
That's what I think. I mean, again, listen, inflation has not come down. Okay. Do you go to the grocery store? Okay. They talk about inflation on items, but they only count 4% for food and energy. Now, other than an emergency or a crisis, what do you spend most of your money on? Food and energy. So again, we can't count that. It doesn't take a big enough percentage. All you have to do is ask the average consumer, is inflation really 3.5%? And they're going to say, no, it's not. It's like 20% because it's not 3.5%. It's a garbage number. And if you put garbage in, you get garbage out. And remember, those numbers are often changed or redone after it's already comes out. Just like the jobs number. If you look at 18 out of the last 21 jobs numbers, the number has been changed lower on 18 times out of 21 jobs numbers. So we're seeing artificial jobs. And to go to the job sector, which talks about working people, since 2021, 66% of the jobs have gone to illegal immigrants. Only 33% of jobs have gone to Americans. So where are they making the money? Which is why you're seeing people can't afford to live. People are living paycheck to paycheck. Mortgage rates, 7-8%. So it ruins the value of the market because the people aren't selling. But of course, that is the right rate. Mortgage rates, when I got my first mortgage, was 14%. The market can support more. The problem that we have is that the Federal Reserve gets too far involved and government gets too far involved in these markets instead of letting the free market price itself, because asset classes will price themselves. People do it every day. They don't realize they do price discovery. But if you go to the grocery store, and if loaf of bread is $3 at this one, and across the street is $1.75, you're going across the street to pay $1.75. You're not going to pay the $3. The market will price itself if the government would stay out of it and the Federal Reserve would stay out of it. And if they want to get inflation and not why they get 2%, I have no idea. And neither does Jerome Powell, by the way. He said that he has no idea why the target's 2%. But they're not going to get inflation down with the current structure of what they're doing. And they continue to cost Americans more money. And of course, the biggest thing, back to jobs, is out of all the jobs created, 50% of those jobs are government jobs. And who pays for the government jobs? The American citizens pay for those jobs.
That's an amazing insight. I had a really similar question in my mind where, I know that I think I saw in the news that average debt on a credit card is like over $6,000 per person in the US. And, the mortgage rate's high, the food, energy prices is still high. I'm just wondering how they might be living paycheck to paycheck, but it's even higher than paycheck to paycheck. Like the debt is higher than what they get paid monthly. And I'm wondering how they can maintain that life. How long could that go? And the other thing is, what if we have a major unemployment or a layoff? What will happen to those people that are already in high debt and can't even pay, paycheck to paycheck?
Well, that's a big problem. That's why they're paying the minimum on their credit card, which means they'll never get out. And of course, because of the lobbyists, credit card debt is not dischargeable by bankruptcy. So they're going to owe that money whether they can't afford to pay it or not. And that debt, that interest is going to keep piling up. And all they're going to do is owe more money and never be able to get out. And of course, that's another problem that has been created. They make it easy for people to get credit, and of course, they can't pay it back. So they make it easy for you to get that credit card. They make it easier for you to borrow money, and then of course, eventually you're going to have to pay it back because credit card is not dischargeable by bankruptcy.
You say that there's so many warning signs at this point of time in the market, but is there like a specific indicator or a specific event or number that you're keeping an eye on that is a real or really serious red flag to you?
조금이라도 도움이 되셨다면 주위 분들과 나눠주셨으면 너무 고맙겠고요. 구독과 라이크를 해주시면 더욱 감사하겠습니다.